All right, so we're just talking about it. Rates right now for the 30-year about 6.5%. A year ago was almost 1% higher. Does that have a real impact, 6.5%? And if so, does it have a bigger impact on existing or new home sales?
I believe it'll have more of an impact on new home sales because the builders could still pay down rates. I haven't seen anything to have sustained growth in the existing home sales market until we get rates below 6% and having it stay there. But the builders have shown that they can grow sales since the lows of 2022 because they live in a kind of sub 6% mortgage market. So uh, we got a little small bounce recently in the existing home sales market. Purchase application has picked up just a tad, but nothing to get too excited. Rates are still a little bit too high for the existing home sales to grow.
Yeah, it seems like people really aren't getting excited. I was on your site, the Housing Wire site. It's backwards looking data, but it shows mortgage applications down 10% for the week ending on August 16th. Why is that? Why are the applications down, especially with rates down so significantly from just a year ago?
You know, I would like to compare this period to the early 1980s when affordability was actually a little bit worse back then. But mortgage rates went 2.5% lower and stayed there. So for us to get sustained growth, mortgage rates probably have to be between 4 to 6% for a while. And then since home sales are really at record lows, we can grow sales from there. Now the builders have shown us that you can grow sales in a sub 6% mortgage market. The existing home sales isn't there. They don't have that ability to push rates lower like the builders can.
So, Logan, of course, we're coming off the last night of the DNC. Kamala Harris speaking last night. Something that's made some headlines, a lot of people are talking about, is her plan for that $25,000 assistance when it comes to housing. I just want to get your take on it. In your view, does that have the potential, at least, to have a meaningful impact on the housing market, especially, for newer buyers and younger buyers?
The 2010 tax cut actually boosted home sales very briefly. It brought forward-looking demand in. So it does have the potential to grow sales if mortgage rates keep on going lower. Both those two things put together can grow sales. I do believe, again, the builders will probably benefit more with that plan. And if you really want housing starts to grow, you're going to need more new home sales. And that will assist with lower mortgage rates to boost sales up. Definitely, for sure, considering how low existing home sales are today.
All right, I want to come full circle. We're going to hear from Jay Powell later today. He's going to speak at Jackson Hole. What he says, does that actually influence the mortgage market? I mean, we talk a lot about rates and mortgages. How closely are they actually correlated or tied?
Well, we've had a 1.5% move from the highs of last year. I think the mortgage market is really working off the labor market. If the labor market gets softer, definitely rates can go lower. What rate cuts can do is make the mortgage spreads better. We're about 75 basis points to 1% higher than what we would normally see mortgage rates. Rate cuts and a more dovish Fed can make the spreads better over time. That will definitely be a boost for housing because that does get you in a sub 6% mortgage market world.